Hello everybody, how's everyone doing? As for me, I'm doing pretty well. I did a 3-hour interview last week and it went pretty well. Other than that, I think the next stage is to get some references ready. Anyways, in this video, we'll be talking about some current events and the overall state of the markets. Let's start off with Evergrande by reading through this New York Times article. Xu Jiyin is the chairman of the Evergrande Group and is one of the wealthiest people in China. To become wealthy at that level in China, most likely he had to get approved by the Chinese government. For instance, in a 2018 speech he said, "All I have and all the Evergrande Group has achieved was endowed by the party, the state, and the whole society." However, with Evergrande going south, it looks like China is ready to step in. Evergrande built its company by over-leveraging so that it can buy more land and initiate multiple projects at once. They have borrowed money from a lot of foreign institutions as well as with people in mainland China. This has caused Evergrande to miss a $300 billion payment to different foreign investors last week. Therefore, the media was comparing this to what the Lehman Brothers did in 2008. This leaves the Chinese government in a tricky spot. If they save Evergrande, they send a message that some companies are too big to fail. If they don't, then 1.6 million home buyers, creditors, contractors, and even small businesses will be affected. Personally, it is hard to call whether this will cause another Lehman Brothers situation. For instance, China is crucial in the world economy, and with economies all over the world more intertwined than ever, a real estate crash in China would indeed have some type of impact. Furthermore, most economies are already stretched pretty thin as they already have given stimulus and kept interest rates low due to the pandemic. But in the end, this could simply be another headline and the market moves on as market crashes do not occur very often. Other than that, back in the US, Senator Manchin and Sinema met with President Joe Biden at the White House to trim the stimulus plan so that the centrists and the progressives can agree. Pelosi also chimed in, saying that we have to see what comes out of the negotiations that are going on. If there are worthy commitments we have made, we will pass both bills. The markets are pricing in that the stimulus bill would pass, and if we see any adjustments to it, then most likely the markets will adjust accordingly. Since the meeting is about trimming, it would most likely produce a stimulus package that is smaller than what is currently set. In other news, we saw the Senate Republicans block the U.S. debt limit hike. Although the Senate and the House is controlled by Democrats, it is only by a narrow margin. As mentioned before, Biden is working to help convince some moderates so they can pass the bill. However, lawmakers have only until Thursday to prevent a possible government shutdown. If the government is shut down, then this could result in furloughs for hundreds of thousands of federal workers in the middle of a public health crisis. We had one of these in 2019 during Trump's presidency, and it lasted 35 days. Many believe that Republicans are doing this so that it can look bad for the Democrats, as next year is when the congressional election starts. With that out of the way, let's do some technical analysis on all the markets. Here we have the SPX. As you can see, we're holding the 0.382 Fibonacci level after failing to hold on to the 0.236 Fibonacci level as support. This isn't surprising as the Evergrande news shocked the entire markets as prices were already at an extremely high level. As you can see, we're down around 5% from the all-time highs. Furthermore, we seem to have this red line as some sort of resistance level. Although it is not the cleanest line as there are some wicks that break above it and some bars that don't even interact with it, we can see that price is fighting against this line. The Nasdaq 100 has a very similar graph to the S&P 500. We dropped around 6% from the all-time highs and seem to be trending downwards after failing to hold the 0.236 Fibonacci level as support. We dropped around 6% off the all-time highs and seem to be trending downwards after failing to hold the 0.236 Fibonacci level as support. There's not much to say about this as markets are just looking at to what China is going to do with the Evergrande situation. The DXY is making some interesting moves today. It is just about to put a new all-time high as well as breaking through this important red trend line. This red trend line is a very important trend line as it is an important area of support back in June and August, but also an important resistance line very recently. However, we did see the price wick above it, and it should be interesting to see how it decides to close. Let's now move on to the crypto world. I was reading up on what happened with Bitcoin last week and I stumbled upon this article which brings the bearish takes on Bitcoin. So last week we saw China ban crypto transactions and mining. Initially this dropped crypto a bit, but prices have rebounded since then. According to some people, this is the 7th time Beijing banned crypto in some way. Many bulls see this as something good for the system, as it would promote Bitcoin growth to move away from China, where everything is heavily regulated, to some place like the US. According to the author, he believes that this logic is a stretch, as the Biden administration has made it clear that it sees cryptocurrencies as a fuel of ransomware, a vehicle for fraud, and a potential threat to financial stability and post-COVID reconstruction. The author believes that US could follow suit, but the later it waits, the harder it would be, as Wall Street is getting more intertwined with the crypto space. However, he believes that this promotes more regulation. For instance, 1/3 of the special crypto hedge funds are now worth $3.8 billion. With that much money in play, it is just inviting new regulations to come forward. He also states that people who are painting China's actions as inappropriate are also wrong. China is banning crypto so it can promote its digital yuan. Therefore, many countries in the future will be taking similar steps to promote their digital currency. He ended the article saying that for cryptocurrencies to get fully banned, there must be a global crackdown on crypto like we saw with gold in the 20th century, where there were rules preventing the ownership of gold. I decided to cover this article as knowing what both sides of the trade are thinking is crucial. Although I root for crypto, at the same time I believe it is important to stay grounded and see how much more crypto has to be adopted before it can be seen as something legit. Other than that, we saw Kraken pay a $1.25 million civil fine to settle US charges that it illegally offered certain transactions in digital assets including Bitcoin. Payward Ventures Inc., also known as Kraken, offered margin retail commodity transactions in digital assets to US customers who were not eligible. The firm also acted as futures commission merchant without registering as one with the agency. Kraken did not admit the U.S. Commodity Futures Trading Commission's findings, but instead said it would take a more proactive approach of agreeing with a cease and desist from further violations. Furthermore, CFTC Commissioner Don Stump said that its rule may be unclear for the cryptocurrency firm, so this problem may have occurred. Let's now look at the Bitcoin chart. As you can see, we got rejected by the green trendline after testing it. We were not able to break through it, and it seemed to be approaching the 0.5 Fibonacci level. The interesting point about this level is that we are holding the upper bounds of the Wyckoff accumulation phase. I believe that a retest of it is not normal, but it should hold as an area of support, as price used to consolidate in this area for a while. As for Ethereum, we see that it's mimicking Bitcoin's chart, as we found the 0.5 Fibonacci level as support. There's not much to say about this, as all cryptocurrencies, including Bitcoin, are looking at the currently weak markets. The Ethereum versus Bitcoin chart shows that Ethereum has been taking a harder hit off the current state of the economy. We also see that we're consolidating in a nice channel. Let's end this video with a portfolio update. Here we have Bitcoin. As you can see, we have come down from the recent highs. I'm now down 5% off this trade, and it seems pretty horrible. Here we have Ethereum. Ethereum is also quite a bit off from its all-time high, and we see that we broke down below the $3,000 mark. I'm still up 372% off this trade, but that's pretty insignificant as I got into this trade fairly early. This is Litecoin. The final coin in my portfolio is also not doing well. We see that we're down 7% in total, and yeah, there's not much to say about all cryptocurrencies as the markets themselves look very shaky. With that, I'm going to end the video. If you liked this video, press the like button. If you have any questions about this video, leave a comment below. If you want to watch more videos like this, press the subscribe button. This is Books of the Stock Market, and I'll see you around next week. Thanks.